And here we go. What is up, everybody? Welcome back to Stacks About the Numbers. And honestly, just too damn good, baby. We're doing updates here. We have two companies that we've been keeping an eye on. Both of them just reported earnings after market close. And in my opinion, both of them are looking phenomenal. So let's get into it. First company, everyone's favorite, SoundHound AI Incorporated, ticker symbol SOUN, listed here on the NASDAQ. Stock actually slightly red today after rallying for several days, as we see, running from the low fives up to almost $8 a share as of late. Closed at $7.56, down 21 cents, 2.7% on the anticipation of these earnings coming out. We can see that when we initially got the report, we randomly tanked down to the low sixes, and in my opinion, that makes absolutely no sense, and we'll explain why. So first of all, I want to give credit where credit's due, because someone raised a question and a concern about the recent SoundHound offering, which honestly I wasn't seeing anywhere I looked. And I pulled up, I know on the SEC filings, shout out to Now Parties who told me available on SEC filings. I pulled it up the other day. I only saw 20 million, and they never got back to me. But yeah, now we see the $120 million stock offering. And shout out to Ricky, who initially raised that concern about 3 days ago. And usually stock offerings, as we know, could be viewed as diluting the stock, or could be viewed as a slight red flag in the moment if a company has to, raise cash and capital immediately for some sort of issue that we might not be aware of, whether it's to, pay down debt or whatever it might be. But the key takeaway, in my opinion, is that the shares were offered at market price. And that's why usually you see a dip down, because a lot of times if a company is truly struggling financially and they really need the liquidity, you'll see an offer down at a lower price. And that's why usually the stock will immediately start to sell off and go to that price or even lower. Because what it kind of means is that the company is basically acknowledging that to ask for current market price may be overvaluing it. So here, again, SoundHound, whatever, 7.5. So if they did a $120 million stock offering at $5 a share, that's where the stock would have went to. You understand what I'm saying? But they came out, they said $120 million offering at market price. So not necessarily the biggest negative. But let's get into the real news that everybody wants to know about, which is the earnings. And yet again, the company comes out with a great quarter of revenue growth. And now this quarter also beats on the EPS side as well. So they report a loss of 6 cents a share. Analysts were expecting a loss of 7.4 cents. They beat that by 1.4 cents, roughly 19.25%. The revenue growing very nicely, in my opinion, posting over 25 million in revenue for the quarter. Analysts were expecting 23. They beat that estimate by a clean 2 million in change, roughly 9% beat on the revenue side. The stock, again, as you see, immediately dropped down, broke this trend line here that I have drawn out, and then spiked right back up, came to retest, bounced off of it, and actually went green, and has now kind of flattened out. We can see the tightening taking place. And in my opinion, we draw out some trend lines here, and you can see, just look at that tightness. Even if you go from there, look at that tightness here taking place. So literally, as we're recording, we're potentially approaching an apex of this triangle after hours. And in my opinion, as crazy as it might sound, the stock technically has the potential to pop up and out. Even though, again, we could make the argument, well, they just made 25 million. We have a market cap of, 2 billion and change, could be viewed as overvalued. Definitely a valid argument. But again, the snowball effect that we speak about of a company reporting, consistently positive earnings. This company, SoundHound, has basically steadily been upping guidance for both following quarters and full year for about the last 2-3 quarters in a row. They recently had the Amelia acquisition we spoke about. That brings them into the healthcare sector. And they also reported that apparently they signed a large domestic U.S. pizza chain as well. And this is what I said was going to happen. If you recall, when we initially did those updates on the news about them signing deals with Krispy Kreme and White Castle, I said, you watch. I said, they're going to show and prove that their system, their software is efficient. It's probably going to increase whatever, the amount of customers, the efficiency that they roll through the customers and generate, quicker, better revenue for the business. And I said, in my opinion, it's only a matter of time before the word spreads like wildfire. And then boom, all of a sudden, all of these other fast food chains, restaurants are going to start signing up with SoundHound. And now the proof is in the pudding, and we're slowly seeing and reading about these updates from these other businesses. So let's get into what actually happened. SoundHound AI, Q3 earnings. Revenue beat, EPS beat, quote, largest quarter on record, incredible market enthusiasm for conversational AI. Again, on this channel, this stock originally brought to you down in like the low twos. We watched it go up to 4 or 5. I stayed with it. I was doing updates down at 160, 170. People at the time didn't understand why the stock was down, what's going on, should I hold SoundHound? And I said, in my opinion, take a step back, eliminate the emotion, remain stoic, see the long-term picture. Look at where this could potentially go over the years. And we're already seeing phenomenal results, and it technically hasn't even been that long of a time frame. So just imagine what could potentially be on the horizon 1, 2, 3 years from now for SoundHound. For the record, I do not have a position in SOUN. Q3 earnings. SoundHound reported third quarter revenue $25.1 million, beating consensus estimate of $23.02 million. The company reported an adjusted loss of 6 cents per share, beating analyst estimates for a loss of 7 cents per share. Total revenue was up 89% on a year-over-year basis. SoundHound said it significantly improved customer concentration in the quarter. This, in my opinion, is the biggest key takeaway from this earnings report. Improved customer concentration in the quarter, with only 12% of revenue attributed to its largest customer, down from 72% in the prior year. So a year ago, 72% of this company's revenue came from the big boy on top, the largest customer. Now, only 12% of total revenue is coming from that largest customer. What does that mean? That means we have more customers, and of course, we're signing them up at rates that are equal to or potentially higher than the previous rates of the largest customer from last year. You understand how I just got to that conclusion? So in my opinion, that hands down is one of the best positives for a company like this in its current state. That is absolutely phenomenal. Because what that tells me, in my opinion, is the snowballing is happening. That's what that tells me. But again, that's just me. I don't know. You can go and look how the other hobbyists feel about it. SoundHound ended the quarter with total cash and cash equivalents of $136 million. Quote, this is SoundHound's largest quarter on record as the company takes its first steps into important new verticals. Our increased scale, combined with incredible market enthusiasm for conversational AI, is allowing us to execute on the company's vision. SoundHound raised its full-year revenue outlook again for 2024 and 2025. The company expects full-year 24 revenue to be in the range of 82 to 85 million. SoundHound sees full-year 2025 revenue in the range of 155 to 175 million. Before this quarter, I believe it was about 150. So that is a phenomenal jump in full-year revenue that we're expecting to see now going into 25. Quote, we believe that voice is the, quote, killer app for applied generative AI. That's what they said last time, but I respect it. Thanks to our best-in-class technology, mastery of complex vertical integrations, and proprietary AI software, SoundHound is ideally positioned to capitalize on this huge and growing opportunity. SoundHound executives will hold a conference call. Bada bing, bada boom. SoundHound AI lifts outlook after Q3 sales surge. SoundHound AI's third quarter sales surge as the company integrated its voice into more cars and scored customers in new end markets, prompting a lift to its full year outlook. Hold on, let me turn that Discord off. The voice AI company reported Tuesday that revenue soared 89%. Yep. Said SoundHound sales volume more than doubled during the quarter as the company broadened the mix of customers and industries it serves. What did I tell you? What did I tell you? I said it's only a matter of time before the word spreads and this technology slowly shifts into almost every sector of business. And it was, again, it was the fast food chains. Then they had the Amelia acquisition. Now we're in healthcare. Then they teamed up with NVIDIA, and they put the voice AI software in the autos now. All of a sudden, we're spreading out. While more than 90% of SoundHound's revenue came from the automotive industry a year ago, again, this is another beautiful positive that we're seeing, just like we read before about the largest customer being responsible for 70+% of revenue. Now it's only 12% of their revenue comes from the largest customer. Same thing right here. More than 90% of SoundHound's revenue came from the automotive industry a year ago. The latest completed quarter saw substantial contributions from restaurants, financial services firms, healthcare, and the insurance sectors. So all of a sudden, we're not a one-trick pony anymore when it comes to industries and what specific type of sector that this technology could be utilized in. Do you understand? Quote, we signed a lot of new logos and expanded with existing customers, and then we entered new verticals. So what that tells me, again, in my opinion, this sounds like we're going to continue with this snowball rolling. And we may be close to maybe 30 million in revenue this time 3 months from now when we see next quarter's earnings. For the first time, the company logged higher per vehicle royalties from automotive customers during the quarter after upgrading the AI voice assistant. SoundHound's entrance into new sectors, including healthcare and financial services, was hastened by strategic acquisitions, including a tie-up with the AI software provider Amelia last summer. This apparently was a phenomenal business move. The company has also partnered, here we go, with another major U.S. pizza chain for AI-assisted customer services, though it has yet to disclose the company's name. Quote, now 3 of the top pizza brands are using us. That is quite a feat, in my opinion. So that's why I think initially you may have seen the drop, and it could have been anything. It could have been the fact that, earnings were just released and someone with size just exited immediately just in case the stock tanked. It could have been that even though earnings came out and the initial numbers were good, again, someone with some size may have felt that the stock could be viewed as overvalued. It may have topped out, and it might go into a slight consolidation range, maybe over the next, 30 days or so. Right? So they just hit the sell button. They just got out. So, obviously it could be interpreted in a number of ways. In my opinion, the simple response is simply that it was 100% bullshit. That, again, we saw a swing like that, especially since the stock immediately spiked back up and then even went green after it was down over 20%. So, obviously, there are multiple ways to look at that big drop and then the pops. But in my opinion, I'm hearing a lot of good news. And when people tell me that something like this could be viewed as overvalued, again, I laugh for 2 reasons. Number one is because, let's call it like it is, they missed the low price, which of course was brought to you on this channel, I don't know, a year ago. And, they wanted to own it at 253, and the stock, hasn't dipped below 4 since we got the news of the NVIDIA investment. And now, obviously, as of late, it ran from $5.50 up to almost $8. So those people who missed the boat, they want to talk about fundamentals and say it's overvalued, right? So that's first of all, it's because they missed it. That's why they think it's overvalued in the numbers. And also on the flip side, as I always say, we can simply take a step back and look at the recent surge that we saw in space companies such as ASTS and Rocket Lab, who are both basically generating no revenue and are currently trading roughly 2.5 to 3 times as valuable as this company that we're reading about right now, with another earnings beat, another full year guidance range for this year, increase for next year, and of course, just signed a big pizza chain, right? So those companies with no numbers are worth 2.5, 3 times as much as this company. But when you say that, the numbers don't matter. Then we look at SoundHound and they want to say, oh, it's overvalued in the numbers. I'd love to see you drop down to 4. Yeah, I bet you would. I bet you would. Johnny come lately. It is what it is. SoundHound now expects 82 to 85 million in revenue for the year, up from a previous target of at least 80 million. Bada bing. For 2025, it forecasts revenue of 155 to 175 million, up from a prior projection for at least 150 million. Now we're at 155 to 175. Mid-range, we go 165. Guess what? That's 10% above previous guidance for the year. Phenomenal. Company posted a loss of 21.8 million or 6 cents a share in the third quarter, compared with 20.2 million or 9 cents a share in the same quarter a year ago. Stripping out one-time items, the adjusted loss was 4 cents a share. Analysts expecting 7 cents a share. Overall, in my opinion, this is phenomenal. Another pizza chain won the business of another large pizza chain, though it can't say which one just yet. The company offers restaurants voice-enabled AI solutions for order taking now, and it now counts, quote, 3 of the top pizza brands as customers. SoundHound is currently working with 7 of the top 20 quick service restaurant brands and recently hit the milestone of having processed more than 100 million customer interactions for US. They recently started rolling this out, and we already took care of 100 million customers. And they're still in the state of infancy. This is new technology that they rolled out, and they tried to tap all of these restaurants. And they're already working with 7 of the top 20 quick service restaurant brands. They already have 33% of that market. And they essentially just started. Do you understand what is potentially on the horizon? That's why people want to tell me, oh, it's overvalued in the yeah, you know what? Whatever. But also at the same time, with all of the nonsensical rallies I've seen in companies that don't deserve it from the fundamental side, guess what? To say that this company, as I said in the last update, is worth 4 billion, 5 billion, I think that is being ultra conservative, which of course would essentially be almost a double from now. We'd be looking at 13, 14, 15 a share. SoundHound AI logs 89% revenue growth in third quarter, getting its car-making clients to start paying more for the first time ever. So that's what I mean, right? They took a little bit of a hit. Almost like when that salesman comes into you, right? And you're trying to haggle on the price or something like that, and they'll turn around and say, you know what? I'll give you this lower price. I'll take, the 5-10% hit or whatever. I'll pay it out of my pocket. You know why? Because I'm that confident that in 30 days or, 3 months, whenever the heck you want to get back to me, I am that confident that you are going to be a repeat customer. You are going to be impressed by our technology. You are going to see the efficiency, and you're going to give me, again, another order. But of course, you're going to pay sticker price, and we're going to have, a long and fruitful relationship for both parties involved. So it's almost a situation like that, right? Like, yeah, we'll take the hit now, because I know in 3 months you're going to be impressed, and you're going to come back and you're going to say, all right, let's do some serious business now. So now, as we see again, now the revenue has grown, and the prices and the rates, from these car making companies are now coming in at a higher level than they were 6 months ago, 12 months ago, and boom. Now we're heading from the red to the black. And also similar to what we're seeing, with Fubo. Same thing, it looks like we're seeing here. If the revenue steadily continues to grow, it seems like the losses are going to tighten and tighten even more, and then we're eventually going to get to the point where the company is break even or potentially net income positive, which we know will cause an even higher surge in stock value. In Discord, I mentioned, as I was digesting this news and saying I was going to jump on and make this video, I said, in my opinion, SOUN might run to $10 right now off of this news. So we know that sometimes after hours, we don't always see the immediate news. I know there were some quarters where we kind of remained flat or we were slightly red, and then all of a sudden the stock was running for like 3, 4, 5 days in a row. So we have to wait and see how the stock reacts tomorrow and the rest of the week. But in my opinion, if this stock was to run up to like the high eights, get back to like 9 or 10, believe it or not, in my opinion, I think it's justified. The voice AI company offers a digital assistant that automakers integrate into their vehicles. Car companies have historically resisted paying more when SoundHound upgraded its assistant, but that changed with the latest upgrade, which incorporates ChatGPT and other large language models into the assistant. Quote, we are actually seeing an increase in royalty per unit from automotive companies for the first time. This is, let me tell you something, this is a phenomenal earnings report. And yep, we get some headlines here. Yep, raises 24 guidance, raises 25 guidance. And again, people were saying, well, the revenue's growing, but they, kept missing on the EPS. Well, guess what? Now they reported a smaller loss, a more narrow loss than Wall Street expected. So now what are you going to do, right? And we can see now, of course, after I initially spoke about the triangle stock, of course, is breaking down instead of breaking up. But in my opinion, again, you guys know how I feel about it. And if you were new to this position and you wanted to start accumulating shares, again, in my opinion, you always piece your way in. You never go all in because we never know what's going to happen tomorrow. And if markets begin a correction for, the next 8 months or something, then yeah, SoundHound could slowly bleed down and remain quiet for over half a year. And then you're going to be sitting there saying, oh, I shouldn't have bought all those shares at 7. Now it's at 5. I could have bought more. I could have averaged down, right? So that's why we piece our way in and we build a position and accumulate shares. In my opinion, that I think is the best strategy to do it. But again, in my eyes, here at 720, could you make the argument it's overvalued in the numbers? Yes. Would I personally still buy it? Yes. If it goes down, would I get upset? No. If it goes down, would I buy more? Yes. That's me. That's how I feel about it. Let's look at stock charts real quick, because we also have another company to look at as well. We can see the RSI. I got all these ads now. We can see the RSI now overextended here, 72.5, which is probably why we had a little bit of a red day today. Could have been viewed as overbought. And again, it could remain flat or quiet even for a day or two if we just look at the RSI. But again, in my eyes, the overall positivity of this earnings report should actually drive this stock even higher than where it is. If you disagree, again, let us know down in the comments section. You guys know you have carte blanche in the comments. But in my opinion, I don't know. I'm reading really nothing but positivity when it comes to SoundHound. So again, if we strictly just want to look at the revenue to market cap comparison, that's pretty much the only argument you can make for a potential pullback. Other than that, this stock might be gearing up and getting ready to explode, in my opinion. But we can see, again, MACD recently crossed to the upside. Stock's been chunking up here. And, of course, people were pumped about the earnings. RSI on the weekly almost topped out as well, up here to about 69.25. So, again, that's why we could remain quiet and even pull back a little bit after this big run that we recently had. And, in my opinion, that may be done to try to sway you out of the situation. So that's why even right now, if I saw this stock go from 7.5 down here to this moving average of 4.5, I personally wouldn't lose any sleep over it. That's how confident I am in this situation, especially for the long term. So obviously, if you bought before earnings and you were hoping for a 10% pop, now the stock's, kind of red here, yeah, that kind of sucks. So you might have to end up, hanging on for like a week or so before this, does a little lull, drop down, and then begins its U-turn recovery based on the good news, right? Let the RSI readjust, let it sell off and bottom out, scare out the uneducated investors, if you will, and then it'll start to rebound, right? So that's why, again, if you just jumped into it for earnings, it's a little bit of a rough situation now. You might have to hang on maybe for a couple of days longer than you initially intended. But overall, in my opinion, again, I really do think it's going to keep going up. But RSI topping out, again, if we want to keep it flat or slightly red, I guess I can understand. But overall, that was a phenomenal quarter in my eyes. Switching over to The Honest Company, symbol HNST, listed here on the NASDAQ. I said, in my opinion, this stock can easily get to $5 a share and hit new highs. And we can see today the company broke above 5, getting to 504, hitting new 52-week highs. And we can see after hours now the stock is up to 527, up almost half a point, almost 10% on news of yet another beautiful earnings beat. And you're noticing a trend with these stocks that I say I personally like. You're noticing that if they're operating at a loss, the losses are tightening. This company actually just went flat. So the hype that I have, that I'm waiting for behind SoundHound and Fubo, as I said, waiting for the companies to go EPS flat and potentially net income positive, is happening before your eyes with HNST. So I've already said that I like this company in general, I like this company in the numbers, and I think it's going to continue to climb. And we have them come out with a phenomenal earnings report. And we can see that they reported flat EPS, Wall Street expecting a loss of 2.5 cents. Boom, no loss. Beats that by 100%. And the revenue, slow and steady, wins the race. That's why I say, in my opinion, follow the money, follow the revenue. The company posts $99.237 million off analyst estimates of $92.927 million, beating by roughly 6 1/3 million, or about 6.8%. Also, in line with what we just read with SoundHound, they also increased their guidance. So revenue increase of 13.1 million, or 15.2% from the same period last year. For the 9 months, revenue was 278.5 million, an increase of 24.4 million, or 9.6% compared to same 9 months last year. Gross profit 38.4 million, an increase of 11.2 million, or 41.1% compared to the same period last year. For 9 months, gross profit was 105.9 million, an increase of 35.6 million, or 50.6% compared to the same period in 23. Do I know how to pick winners or what? Operating income 0.1 million compared to an operating loss of 8 million for the same period last year. Phenomenal. For the 9 months, operating loss was 5.3 million compared to what used to be 40 million. Net income 0.2 million compared to a net loss of 8.1 million. For the 9 months, net loss was 5.3 million compared to a net loss of 40.4 million same period last year. Net income again flat. This time last year lost 9 cents. For the 9 months, 5 cents compared to a net loss of 43 cents for the same period of last year. Just phenomenal. Honest Company reported a significant increase in revenue, driven primarily by a $9.9 million increase in wipes revenue, a $2.3 million increase in baby personal care revenue, a $1.8 million increase in diaper revenue, and a $1.5 million increase in baby apparel revenue. This was partially offset by a $2.7 million decline in skincare and color cosmetics revenue. So that's why something like this, that specific segment, you may want to look at. I know I've personally spoken highly about other health companies that are kind of on the up and up. And, well, one of them, Elf, is already established, Elf Beauty. And also, skincare, we also looked at Hims and Hers Health, HIMS, right? So that's why in that specific segment, they may have a little bit more competition. But again, baby wipes, personal care, baby apparel, it really seems like they're on the up and up. So this company's slowly gaining more and more traction, more and more attention, more and more popularity. So hopefully these steady increases just continue. But it looks like, in my eyes, they're going to get above that $100 million mark soon. And we could potentially see, it might not happen immediately next quarter, but maybe by the next quarter. So in my opinion, in the next 1 to 2 quarters, we may see this company go net income positive, which would, of course, skyrocket it even more. Excuse me. Wipes revenue. Yep. Operational efficiency. Company achieved cost savings across most of its cost structure, including supply chain and product cost, which contributed to a decrease in cost of revenue as a percentage of revenue by 712 basis points for the 3 months and by over 1,000 basis points for the 9 months. Marketing expenses increased by 44.6%, but apparently it's working, primarily due to a $3.3 million increase in retail marketing. R&D expenses increased by 10%. Got to spend money to make money. This increase was primarily related to higher spending on safety testing, phenomenal, pilot trials, and related employee expenses, consistent with the company's focus on continued innovation. Yep. And a quick reminder, again, I know I mentioned I was a broker, like, what year is it? Yeah, I don't know. It was like 10 years ago or something. But I mentioned that back when I was a broker, I actually used to pitch Take-Two Interactive, which of course is a video game development company, Rockstar Games. They make Grand Theft Auto that everyone's pumped about. And that stock, it's funny because that company at the time, I believe, had a market cap of about $1 billion. And that's kind of what they were bringing in for the year. But they were operating at a loss. And people were pumped. I don't remember if it was like, maybe like San Andreas or GTA 4. I don't remember what the next GTA was. But anyway, you understand my point. That used to be part of the pitch as well, that at the time they would bring in roughly $1 billion just from that title. And the company's worth $1 billion. So, they're either going to grow over time, Mr. Smith, or maybe they'll get bought out by a larger game developer like Activision or somebody. And obviously, as we see, they never got bought out, but they ended up growing like a freaking animal. But the original point that I was going to make was that at the time, they were consistently reinvesting almost every dollar into R&D. So that's why they were keeping that stock down at like $7, $8, $10, $12 a share. They never really let it break up and out. And then what happened? Then we started to get titles like LA Noire. And we got the report that, again, I used to say this in the pitch. I don't remember exactly what they did, but, they invested whatever, X amount of millions, and they set up like a private studio, and the actors had like, like the balls, the sensors all over them, right? And, there was like 200 cameras they were using to like capture 47 different like facial movements and whatnot. So, again, in the moment, when you hear big reinvestments into R&D, it might not make sense. It might be viewed as a negative. But you may not actually reap the rewards of that reinvestment until, who knows, 12 months, 18 months down the road. Which is why, again, I say, in my opinion, if you truly can see the writing on the wall and what a company is trying to do, how they're improving, their margins, all segments for the most part across the board, revenue keeps increasing, you can, that's what I mean. You are potentially getting in on the ground floor. And we may turn around, a year and a half from now, all of a sudden we're up to 150, 200 million in revenue. We're EPS positive, and now the stock's at $9. The stock's at $11, right? And we were looking at it back at $2.50, $3.25, $4 a share, right? So then once you get to that kind of exponential growth, why is it so big? It's because now you've not only more than doubled your principal investment, but now you've gotten in at such a cheaper price with so much more growth on the horizon that now you're compounding. And that's where real wealth comes from. So again, I know everyone has a different strategy, and I just went off on a massive tangent, but this company, again, reinvesting into R&D, the increase that we saw in marketing expenses, apparently all of this is working because people are, remaining loyal customers with Honest. They're doing probably larger reorders. We're getting new clients. And everything seems to be working as most segments are up across the board. And of course, revenue steadily increasing. And now we're at net income flat. So in my opinion, phenomenal report for Honest as well. In 23, broad-based transformation initiative to build Honest brand. Yep. Brand maximization, key actions, focusing on North America. Entered into 35 million revolving credit, JP Morgan. Matures April 26. This facility includes a sub-facility for the issuance of letters of credit up to 15 million. I don't even know if they'll need to keep tapping that, though, because, again, we're potentially about to go EPS positive, so. Revolving commitment up to 70 million. Again, these numbers will probably steadily increase along with the size of the business as well. Keep that in mind. As of September, there were 2.7 million in outstanding letters of credit, 30 million available to be drawn upon. Stock-based compensation, exercise of stock option, issuance of shares. Company plans to continue driving benefits from its transformation initiative, focusing on brand maximization. Company expects to leverage. Company also anticipates potential inventory write-offs related to the termination of the likeness agreement with Jessica Warren. Implementing price increases and productivity initiatives to offset input cost inflation. Company has experienced and anticipates continued increases in product costs, labor costs. After April 25. Okay, we're reading. Market risks. Again, we're just going to lay out every single risk here. And we're look at this again with the ESG scores and whatnot. Ridiculous. But it does seem like they're trying to do all the right things on their end, so that seems good. And I believe they also increased guidance, and it's funny, we just went through that entire report here. Gross margin up by 710 basis points, 38.7 from 31.6 this time year ago. Phenomenal. Net income, $165,000. All right, we lost 8 last year. 8 million. Now we made 165,000. Where was the guidance, though? I am 99% sure they increased guidance. Okay. Increase in cash. Here we go. Based on the strong performance in the first 3 quarters of the year, the Honest Company has raised its full year 2024 outlook for both revenue and adjusted EBITDA. The company now expects high single-digit % growth in revenue versus full year 2023 and adjusted EBITDA in the range of 20 to 22 million, up from the previous range of 15 to 18 million. So not only do they feel revenue is going to remain strong and steadily increase, but also the profitability from said revenue is now higher than previously forecasted here moving forward. So, I mean, even if they brought in 15 to 18, in my opinion, that's still them heading in the right direction. But now, again, beating on the revenue, coming in above expectations, making 165 grand, and now all of a sudden saying, oh yeah, by the way, we're up in that EBITDA range as well, 20 to 22 million. Again, in my opinion, just phenomenal. And we crunched the numbers, and you can see market cap. I know we just surged 11%. So that would bring the market cap to, 525 million in change, right around there. In my opinion, still undervalued. And I've made that very clear. When we last looked at it, I said, in my opinion, probably going to 5 again. Stock hit 5 going into earnings, well above 5 after earnings. So in my opinion, I do still like Honest. I do think that was an excellent report. And yeah, I used to have the ad blocker on. And then, of course, Stock Charts is like, oh, you got to turn ad blocker on. And now look, I got stuff zooming around the screen. I can't, I can't. I need to focus. I need to put on the blinders. I can't. I got to pay them just to not have whatever. I'm not going to get into it. But honest, as we see, the RSI was also topped out above 70, so maybe we had a slight pullback, kind of understandable. But again, this company, I mean, anytime it dips, you see that it pops. You see that it pops right back up and steps higher. So that's why, in my opinion, do I still like it here at highs of whatever, 5.25? Yeah, I do. If it pulls back to, here, mid-range, mid-Bollinger Band of 4, do I still like it? Yeah, of course. And even all the way back here, yeah, of course. Of course, of course, of course. If you see a company like this reporting growing numbers and then they pop to new highs, but then they sell off, in my opinion, you should say thank you. Because unless the markets as a whole are selling off and correcting, essentially what that means is you're buying like a $5 stock down at $4 or 3 and change, right? So all you have to do is buy the dips, and that's why when we have a growing business and people get upset that the stock goes flat or the stock goes red, believe me, I understand, because I know you want to wake up and you want to make money, you want to improve your financial situation. I understand. But also at the same time, if you quote unquote know that the business is strong and the business is growing, then when a company or then when a stock remains flat or goes red, you should view that as an opportunity, not as a negative. And we're seeing it time and time and time again. So, quick update there. Again, RSI a little overextended. They're kind of in the same boat, SOUN and HNST, right? So we both technically ran up big in the last couple of days. We both had really good reports, beating EPS, beating revenue. Both of them up their guidance. And, Honest is up and SOUN is down. So, right now in the moment, again, as we know, the traders might go after it because of the RSI, who's going to try to bring it down. But overall, you're starting to see the trend with the stocks that I personally say that I really like for the long term. You are seeing consistent growth, potential EPS, net income positivity, raising full year guidance. I mean, it really doesn't get better than that, but yeah, I'm not gonna beat a dead horse here. We're pretty much done. But yeah, MACD's been on the up and up. RSI was 75, but Honest still wants more. Honest, definitely, in my opinion, more undervalued probably from a valuation standpoint than something like SoundHound. So SOUN hitting that 70 plus RSI benchmark, maybe being a little overvalued in the numbers, and now we're seeing a dip in red after hours, even though we beat, in my opinion, kind of understandable. Honest, different situation, because overall, it's undervalued in the numbers, right? Similar to what we saw with HIMS, HIMS. So that's why, I think Honest is up. But again, overall, I mean, I can't keep saying it. In my opinion, both of these names looking really good long term. Both of these names just reported phenomenal earnings, and I still like both of these names. I mean, it is what it is. And again, the Johnny-come-latelys on something like SOUN. Again, we were looking at it back down in the 2s, man. I mean, it was like here, maybe, when we first looked at it, like back early 23, and I remember this looks familiar. We spoke about a potential flagging here, and then we had a pop. We ran back up to the trend line of 5. You can see that was like sub $2. And then we started to pull back here. I was doing updates. I said, in my opinion, I still like it for the longer term. I would view this as an opportunity to accumulate shares, build a position. Look, stock comes down to 150. People didn't understand what the heck was going on. And then going into earnings, oh yeah, by the way, NVIDIA has, a couple of million stake in our company. Boom! That was it. That was it. Now the floodgates open. Now all the hobbyists want to talk about it. Before 4 o'clock even hit, I saw people streaming live on YouTube. Oh, SOUN earnings update live. Now all of a sudden they're doing live streams for you guys on the names that they are late to. Right? And I said, once the stock explodes, then they put the spotlight on it. Then when they miss 100, 200% rally, then that's when they jump on it and try to put it in your face even more. That's when the hobbyists jump on board the train, right? So, again, I think that I think that we did a very, very good job, not only with something like Honest as of late over the last several quarters, but of course something like SoundHound over the last several years that we kind of knew was going to be an animal in the space and was absolutely worth owning down at 3, 2.5, sub $2. And now it's obviously above 7 and probably on its way to 10 again, in my opinion. But that's pretty much it. I'll end it there. So once again, to Stocks by the Numbers, I want to thank you for stopping by. If you have any questions, comments, or concerns, please drop it down in the comment section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they are very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thank you for your time. Have a good day.